Canberra for Cam's Mortgage Minute on Thursday, February the 28th, last day of the month. March is just right around the corner. There's an old expression in a Julius Caesar plate that says, beware the Ides of March. For the Canadian banks, however, I think they're going to keep on marching right along. The banks recently announced their profits, and I'll tell you, they were certainly up. Three of the largest banks, Royal Bank of Canada, TD, and CIBC reported combined profits of $4.7 billion. That's certainly a huge opening for them as far as earnings numbers go. RBC led the way with $2.07 billion in its first quarter, a 12% increase over last year. TD, the second largest, made about $1.79 billion, up a whopping 21%. CIBC came in around $798 million. For them, it was a loss of about 4% compared to a year ago, but that was due to a one-time special charge they took against their profits. If that had been stripped out of the equation, the CIBC would have made $895 million. BMO came out last week, basically a couple of days ago, sorry, and they had numbers of about $1.05 million of profit for the first quarter, which was down 5% from the year before. So what do they see ahead for 2013? They think the growth is going to be a little slower, especially with the new mortgage rule changes. Certainly the returns on mortgage rates are not very high for them in some other areas. However, it seems like the large profits they're making off are on other areas such as investment banking, where income from trading and underwriting is definitely fueling and feeding the fire here. So what lies ahead will be, according to them, sluggish performances on the consumer side. However, on the other side of it, they're hoping certainly the numbers are going to be robust and strong. The three lenders in consideration of all this have boosted their dividends. So you know what, if you're an investor in any one of these three banks, you should be excited. Actually, all four of them. Well, probably all five. At the end of the day, my personal thoughts on this is I don't have a problem with the banks making money. Bottom line is, if our Canadian banking system is to work properly, it needs to be robust in making money. I was having a conversation with a gentleman who had called me out of New York, and he was doing a kind of a survey. And when I was speaking with him, he asked me about our Canadian banking system in comparison to the U.S. banking system. And our system is certainly a lot more regulated. It's a lot more solid, a lot stronger. It's not as fractured or fragmented. So you know what? It's a good news story when banks are making profits. Because quite frankly, if they're not making money, they're not lending money, and we're not in the game of doing what we're doing. So what can you do as a savvy consumer? The goal is not to give them too much of yours. And the way you do that is look for opportunities, look for deals, check out the rates, make sure you're doing your end of things. And that's where we come in. If you're looking for a mortgage, you need anything like that, you'll let me know. It's Cam the Mortgage Man with the Auxilium team. We're always ready, able, and happy to help, and I will see you in March, which is tomorrow, right around the corner. Enjoy this rainy day. Well, it is for us in Victoria. I don't know where you are, but I will see you tomorrow.